because I want to own the picks and shovels. It's not just the gold that people made money on the gold rush. It was the picks and shovels. So in my portfolio, I've got a lot of picks and shovels. I've gone a little farther. I've decided that I'd like to own some of the infrastructure of Web 2.0, Web 3.0. And so I've taken equity positions where regulators allow it, and that's primarily Canada. The NEO exchange is the preferred exchange now. It's been announced the CBOE is buying it. So it's going to be basically an American exchange, but housed in Canada. But it has companies like WonderFi on it. And now that means BitBuy's on it too. That was the first license granted by the regulator there. It trades as an equity, WNDR, and also Immutable Holdings, a company that's headquartered basically in Puerto Rico, where they are building out this huge platform for NFTs. They own NFT.com. They're a blockchain company. You can buy those equities on the NEO exchange in Canada, but where the regulator allows it. And so some of these companies get listed in Norway and Germany where regulators allow it. But for me, those are also full weightings. I've got 5% weightings in those names because I want to own the picks and shovels. It's not just the gold that people made money on the gold rush. It was the picks and shovels. So in my portfolio, I've got a lot of picks and shovels. And again, it's all software. You meet these executives in these companies, they're young, really strong engineers in there. And they don't want to work for industrial companies anymore. They want to be on the chain. That's where the future is. And they're the smartest hands. And that's where they make the most money. It's not just Bitcoin. You know, some of these equities have actually outperformed Bitcoin for me because they've had dramatic moves as markets start to recognize the merits of owning these companies. Yeah. But again, it's like Roy said, I bought these at fractional prices on their first and second rounds. And now they're trading and they've moved materially. So I'm going to keep doing the same thing. I would say the other opportunity is short Marathon, short Hive, short Hut 8, and short Riot. Those stocks are going to get killed when they get their carbon audits started on them because there's nowhere to go. There's just no way to audit it. And they're not going to get an auditor to sign those statements. It's unfair in some ways. I mean, basically, this is a classic case where the nascent industry started just a few years ago by these great pioneer entrepreneurs. Right. They get shot with all the arrows because the president loves climate change mandates. And so does BlackRock, and so does the SEC now, and so does the Loomis bill. So, I mean, that's unfortunate. But sometimes, the pioneers have to get the arrows so that the ones that come behind them can set up shop. I don't buy JPEG NFTs. I'm not in the lazy ape thing or any of that. What I do is I look for use cases that create economic value. And the one I've been talking about a lot lately, there's lots of other ones, but the one that's so obvious and easy to understand because people like watches is the watch industry. So the watch industry, about 12x. So there's billions of dollars a quarter trading in secondary markets for watches. The Rolexes, the Patek Philippe's, Audemars Piguet, FP Journe, all these watches. The majority of them are fake. That's what's happened. You see a Daytona like this go from $13,000 to $60,000. There's a lot of motivation for people to rip them off. That wouldn't happen if there'd been an NFT minted at the actual factory that micro scanned the dial at a high resolution because every dial has micro imperfections in it, and then created an NFT that traveled with the ownership. In other words, give me the ownership papers digitally. There's tremendous economic value in that. And that's an NFT market that's going to explode to the upside as once the white paper is released from the Horological Society. That's where we're going. Same with real estate, same with antique cars, same with pens, same with jewelry, same with all the collectibles that have physical value and asset that'll be turned into digital ownership and then can be moved from wallet to wallet as the watch gets traded. And the royalties can go back in the smart contract to the Rolexes and the Pateks and the FP Journes because they provided and minted the NFT in the first place. Yes, we can. There's no chance that we're going to be banning Bitcoin or anything else that holds economic promise in terms of developing new technologies for financial services and payment systems. That's always been the hallmark of American entrepreneurship. We're not going to ban that. Most of the engineers today that are working on these projects see tremendous potential, transparency, audit, everything. They provide so much upside that they'll they'll remain going. But the one thing that's 100% sure is they're going to be regulated, 100%. But I'd argue that's good news. We get this regulation in place, the institutions will pour in trillions of dollars. Those that have been speculators like Roy and I will benefit from the fact that these will get indexed, and that will be a great upside. And then what happens after that is based on market demand, based on indexing. The majority of the ownership will shift to the institution. The majority of the S&P is owned by institutions. People think retail owns stocks. No, they don't. You know, it's like Facebook. The reason it got crushed was that it got re-indexed from 5% down to 2.5%. And it took 4 weeks to flush all that out because of the new perceived risk on the metaverse and everything else. That is not a retail stock. That is an institutional stock. It was one of the FANGs, still is, but it's all institution.
Genie in a bottle, Kevin, would like to know whether you think we're in a crypto winter now, and when do you expect spring to start? What would trigger a crypto spring?
So the reason we're not going to be in a crypto winter again is that the last crypto winter had no possibility of policy or regulation. That is not the case today. There's enough believers that this regulation will be a good thing, watching these bills go through. It's very rare to see a bipartisan bill in today's Congress, but you have one here, which means both sides understand the merits of cryptocurrencies. And so you have a Ted Cruz, sitting right beside a Democrat, which never happens. And so I look at it and say to myself, that's one of the reasons there's a bid, an underlying bid on Bitcoin and other cryptocurrencies, because there's an assumption in the next 2 years something will happen that did not exist in the last winter. And if you believe there's economic value, you may allocate. And so these are not my largest positions by any means, but in the case of HBAR, the easy way to understand it is it's a quasi-decentralized, quasi-centralized chain. And the reason it needs to be that way is when you're a Boeing or a large global manufacturer, you want some element of centralization because you're trying to control supply chains, which has become a big buzzword in the last 2 years because of the pandemic, and indeed has slowed down some manufacturing, including in the aerospace industry. So HBAR is being used as a use case for actually making it easier to track and control and make the supply chain more productive. Now, if you believe, and as I do, that that's going to work to some level, well, there's a lot of economic value there. That's what happens with these chains. Once a player in an industry says, well, this is great for me, like Solana, they're trying to make the number one chain for NFTs, and that may happen because it's very fast, way faster than what's going on in Ethereum before it goes to proof of stake. And who knows if it really will speed up if that happens, if it happens. And so a lot of this development work going on is being funded by the foundations. And I know in the case of FTX, where I'm a shareholder, and I'll disclose again, a paid spokesperson, they have billions of dollars to put to work to develop these chains for their benefit and the benefit of everybody on their platform. And so these are behemoth platforms. You think about it's kind of interesting because FTX is a centralized platform that's investing in decentralized wallets. Why are they doing that? Because it's smart to do that. Acquire the customer once, never lose them. Provide them with decentralization for maybe NFTs or whatever else they want, but keep a centralized wallet for large holdings that have to be audited, and they need the infrastructure for compliance. So I think all of this is to come, but I'll just tag it again by saying it's all just software. The outcome of different geographies, I mean, you think about the behemoth FTX has become, they did it all outside of the United States. They didn't come here because the regulatory environment didn't provide for what they needed for their clients. And so it's not clear to me who's going to be the winner in the long run. It really will depend when and if the US regulator defines global policy, which I think the SEC will do. It's done it in every other market. You look at the policies in European markets or Asian markets around equities, they mirror very close to what the SEC has mandated. And so I think we're going to get the same thing happening in crypto. It's going to take a little longer. In the meantime, there'll be lots of volatility, lots of opportunity, but it's a little different than stocks and bonds. You need executional skills as a software engineer to pull this off. You can't just say, well, here's my vision for my blockchain. You got to actually deliver it. You got to test it. You got to prove it has scalability, and you've got to prove it has scale in terms of number of transactions per second. All of this stuff is not easy to do, which is why I take a multi-bet approach. Maybe it'll be Solana, maybe it won't be. Maybe it'll be Polygon, maybe it won't be. Maybe it's Avalanche, I don't know. Maybe it's Helium, I don't know. I have some of that too. So, it's all about outcomes. You just don't know.